Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending May 20th, 2022. Let's get into stocks. As you know, stock markets again declined last week with the benchmark S&P 500 dropping 3%, narrowly escaping a 20% decline for from the early January peak. That would have created a bear market for the benchmark. The Russell 2000 declined 1.05, the NASDAQ lost another 377, keeping it solidly in bear market territory. When you look at year to date, what you're looking at is the S&P is down almost 10% for the year, NASDAQ's down almost 25%, or the Dow is down almost 10%, the S&P is down almost 15% for the year. So yeah, we are having a lot of pullbacks right now. Overseas fared much better with the developed markets rising 1.53 and the emerging markets gaining 3.13. Now, which is nice because the emerging markets with our GTR portfolio, our GTR has a lot of emerging markets, so that's going to see a little bump, which is nice. We'll see how that fares as time goes. Now, in the U.S., the best performing sectors were energy and healthcare, while the laggards were staples and consumer discretionary. Now, value stocks, again, outperformed growth stocks. Now, as far as fixed income, bond values rose and interest rates declined last week across all maturities, with the benchmark 10-year Treasury yield dropping 15 basis points to 2.78%. Now, this is below the multi-year high of 3.13, which we reached on May 6th. And also slightly above the 2.59% average annual inflationary rate forecasted for the next decade, but I think we're going to shoot over 2.59%. Indicating that investors may now earn a positive inflation-adjusted return by owning the government bond. We'll see. Commodities, U.S. crude oil inventories fell 3.4 million barrels in the week ended May 13th. Analysts had expected 2.1 million barrel rise in inventories. So stronger refining activity and crude exports have encouraged to draw to inventories. Now, the price of West Texas crude oil closed on Friday at $110 per barrel, nearly unchanged for the week. Let's get to economic data. China's economy fell sharply in April as lockdowns across the country caused retail sales to fall 11.1% year over year, well below expectations. And industrial production dropped 2.9%, also disappointing forecasts. Existing home sales fell 2.4% in April from March. On a year-over-year basis, home sales were down 5.9%. This is the third straight monthly decline as mortgage rates have spiked and prices have risen. Also, the total inventory of homes for sale was down 10.4% from a year ago. The interest rate for a 30-year conventional rate, mortgage rate, was 4.9% in April versus 2.96% a year ago. And retail sales climbed 8.2% year over year in April, which is actually good news. Ahead of consensus expectations on a month-over-month basis, sales rose 0.9%. Importantly, the prior month's reading was revised from 0.7 up to 1.4%. Now, the April year-over-year increase included a 36.9% increase in gas sales price, primarily due to higher prices, and a 19.8% increase in restaurant sales. So all this being said, already we're seeing inflation is high. We're seeing things are slowing down. The market is pulling back, which we can't always go up and up and up and up and up, which is why we have the portfolios that have the dividend income, which is why we have the guaranteed portion, whether if we got a fixed or fixed index annuity, we have cash on hand. This is why we get diversified, because we can't always have increasing markets. This is why we also don't have the emotions get involved and start selling and selling and selling, and now all of a sudden we're never going to make it back. So this is why we keep our head, we keep the emotions out of it. We know the market's going to go through these ups and downs. And yes, it is concerning, especially when we're getting into retirement or close to retirement, and we need this money to live on. Again, proper allocation. That's why we say, we keep saying, hey, ride it out, hold on, we're going to get through this. Guess what? We went through this in 18. We went through this in 08 on a very large scale. We went through this in 20 on a short scale. We've seen this, we've been through this, and this is why you can ride it out. We know how to do it and to make sure you're going to be okay. Okay, let's get into some company holdings. Celanese Corporation, which is a G50 holding, rose 5.7% last week after it was disclosed that Warren Buffett, Berkshire Hathaway, took a new investment in the materials company during the first quarter of 2022. Target, which is a CoreSelect holding, dropped almost 30% last week on news that the company incurred substantial incremental costs during the first quarter to support sales growth that exceeded expectations. The product mix was also unfavorable to profitability. Management also guided to continued supply chain pressures in the current quarter. Walmart, another big company, G50 and CoreSelect Holding, reported sales that beat expectations, doing good, but with costs that exceeded analysis estimates, causing earnings to miss consensus expectations. Shares in the retailer dropped 19.5% last week. So that's part of it. Things are doing good, but supply chain, cost, gas prices, getting to consumer, that's what we're seeing a lot of increases right now. That's causing profits to be reduced, which is causing the stock to go down. So that's it for today. Thank you so much. That was a very long commentary today. Thanks so much for being part of our ARA family. Contact us, call us at 855-756-5700. Visit us on our website, aradvisorsinc.com. Go to our Facebook and YouTube. Make sure you already have the newsletters. If you don't, scan the QR code and make sure you do that. Thank you for watching. Have a blessed and happy Memorial Day. Thank you, veterans, for all your service. Be sure to thank a vet for all they've done for us. Remember those who have passed and who have given their ultimate sacrifice for our freedom. God bless you. We'll see you again next week.